This is not investment advice. This is for entertainment purposes only. Do your own investment research before investing.
Welcome to a guide to every stock on the stock market. Today we're looking at Caterpillar, stock symbol CAT. Caterpillar is an industrial company best known for its construction equipment. Some lesser known components of its business are diesel engines, mining equipment, and financing. If you're new to investing, when you assess a stock, you should ask yourself two fundamental questions. Is the stock a good investment? And is this stock a good investment right now? Spoiler, Caterpillar is a good long-term investment. The executive team can't stop raving about it. The company has increased their annual dividend for 20 years, so I guess they deserve the bragging rights. And to be fair, Caterpillar doesn't play games with their dividend. The dividend comes straight out of earnings with a dividend payout ratio of 38%. For reference, utilities with stable cash flows pay out 50 to 55%. Utilities that are playing games will pay out 80% of their earnings as a dividend, a potential sign that the dividend is about to get cut. Caterpillar does have problems which are easier to see on a stock selection guide. Okay, a stock selection guide, which is probably the easiest way to look at how a stock grows, and every new investor should try using one. But to just simplify what you're seeing here, we want this graph to be up, straight, and parallel. This means revenue is growing, the up, growth is exponential, the straight, and costs are under control, the parallel. Looking at the chart, you can see that Caterpillar hasn't been growing revenue too significantly. For more information on the powerful stock selection guide tool, links in the description below. And if you are a new investor, just go there and check it out now. It's super easy. Since 2010, Caterpillar's revenue has increased 83%. And while that's great for a blue chip stock, don't expect the kind of all-star growth we've seen with stocks like Tesla or Google. What Caterpillar brings to the table is fantastic cash flow. The company has used this cash flow to pay its dividend, buy back shares, and reinvest in the company. In fact, the number of outstanding shares has fallen 18% since 2010. This is one reason why earnings per share has grown faster than revenue. How to invest in Caterpillar? With a beta of 1.1, Caterpillar rises and falls with the market, albeit with higher highs and lower lows. Caterpillar is affected by the price of oil, the price of mined commodities, and the price of food. This is because Caterpillar's equipment services these industries. So Caterpillar will have big swings in revenue, earnings, and price. This stock is one you don't want to hold on to when it's overvalued, so reassessing its valuation at least quarterly is highly recommended. Caterpillar is a long-term hold that needs some TLC. So is Caterpillar a buy right now? Well, as of Q2 2023, we assess Caterpillar as a sell. Caterpillar's price currently stands around $209. This price looks to be significantly overvalued. We assess Caterpillar to be overvalued at $200, fairly valued at $182, and undervalued at $164. We calculated Caterpillar's fair market value by taking its $30.73 book value per share and adding it to a 10-year projected earnings per share outlook of $12.64, grown at a 7% rate and discounted at the current federal funds rate. Now, where did the 7% come from? It's the median annual EPS growth rate. Would average be better? Well, not really, because Caterpillar's earnings growth is way too volatile. You can see the outliers yourself. We dropped book value per share by 2% because Caterpillar took a $1 billion goodwill impairment to its rail unit. Being that Caterpillar noted the rest of their goodwill assessments were fair or undervalued, this 2% risk assessment seemed reasonable. We also slapped a 2% risk assessment onto earnings. This comes mostly due to Caterpillar's natural earnings volatility. Finally, the stock likely suffers from the company's name recognition. Stocks with name recognition, and albeit this is a little anecdotal, tend to hover above their calculated fair market value. If this conjecture is true, then this results in a premium to buy Caterpillar. Wait until Caterpillar reaches your undervalued price point. It's also important to hold Caterpillar until it's overvalued and then protect yourself with limit orders. Caterpillar swings low due to its ties to commodities, but then also swings high due to its brand recognition. Want more stock analysis like this? Check out StockBossip.com. StockBossip.com lets users submit their own stock analysis. content creators on stockbossof.com compete for your views with both engaging content and proven performance. Happy investing!